Hello guys, and welcome back to my channel. My name is Jackson, aka Forex Blue Key. Alright, right here on this channel guys, I teach very practical forex strategies and other forex related content that will help you become a profitable and consistent forex trader. Right, so today on this video guys, we'll be talking about order blocks, and in this video I'll explain order blocks in the simplest form. I'll also tell you guys how to trade them, how to pick the right order blocks, and why some order blocks actually fail. Right, so better stick around to the end of this video so you get the full packet and the full value of this. Right, so without any further ado guys, let's get into it. Alright, welcome back guys. So firstly, what is an order block? Right, so according to Forex B, an order block in Forex refers to the collection of orders of big banks and institutions in Forex trading. So these big banks do not just open buy and sell orders, but they distribute a single order into a check of block to maximize their profit potential. These chunks of orders are called order blocks in Forex trading. Right, so this is just a theoretical definition of what it is. So, but we're going to look at a diagrammatical representation right now of what it is. So, let us just assume. Where is my brush tool at? Okay. All right, there we go. So, we're in this ranging market like this, and then we have a push out. Now this is a clear downtrend, right? A clear downtrend. Now an order block is usually the last buy candle before the impulsive move in a downtrend. So we have a downtrend like this, and this is the impulsive move, right? So we have a buy candle right here, or a buy trade right here, and then after the buy, immediately after the buy, we have this impulsive sell going down. So in an uptrend just like this, so the order block is usually what you find here in the structure, right? So for an uptrend, the order block is usually the last sell candle. It's going to be right here, the last sell candle before this impulsive move. And sometimes you also have something like that right here before the impulsive move. So what they do, these institutions, they create these orders, and they usually come back to mitigate them at some point. Because if you have, in this example right here, if you have a buy trade right here, a buy candle, and then immediately we now have a sell candle, right, and go moving impulsively. This buy candle is definitely in drawdown, it's definitely in negative figures, right? So they will need to push back the market to actually mitigate and close out that order, and then they'll allow the market move in the right direction. And there are a bunch of reasons why they have this, or they do this, or they open this kind of orders and then allow it to be in negative and then come back to close it out, right? So a bunch of reasons why they do this. Some of it is just to manipulate the market, some of it is to deceive retail traders out of the market, to take out liquidity and all of that. Also they do it, to be able to distribute their large chunks of money, because they just can't keep pushing out all the orders at the same time, just like that, right? So with that, now let us get into the chart to understand properly how this works. All right, let's get into the chart now. All right guys, this is USD CHF 30 minutes time frame. So we'll be looking at some examples right here. Okay, so practically this is what we talked about, an order block. Look at this right here. Okay, let me get this. This right here is an order block. So remember what we talked about and how we define it. So this is the last sell candle. As you can see, price just sold right here, then stopped, and immediately we started buying. So this is an impulsive move, as you can see. Right within this impulsive move, we've got another one right here, give us another order block. So you can see this is an order block right here. We have the sell, and immediately price made another impulsive move, right? So let me get this out of the way. Okay, also we've got this right here. This is another buy candle. Even though this closed as a doji, it's still like a buy candle. It closed as a buy candle. So after this, immediately we have this sell. We have this great sell right here. As you can see, price mitigated closely and then started dropping, right? So I think we have other ones right here. Okay, this is another one right here. This is for a sell. So you can see that we have an impulsive move right here. But before the impulsive move, we had this. Before this impulsive move, we had this buy candle right here, and then immediately price dropped, right here. So we have another buy candle and market dropped and mitigated, right? So basically this is what it looks like, right? The buy before the sell, or the sell before the buy. But what you need to understand and how to trade this is that you need to be on the trend, right? The reason why some of these don't actually work is because you are literally trading it against the trend, and then not just against the trend, but you don't wait to see a break of structure. Now before I take any of these setups, I like to see what a potential break of structure which confirms the trend. So it gives you a high probability that that particular order block is going to stick, because if you're going against the trend and then you don't wait for a proper break of structure, then you might just get caught up in the web of these guys, and then they take your money, right? So let's look at this example. For example, this is an order block right here. This right here is an order block. Now this might not be really clean for you, but personally I'll be able to trade something like this. But for the purpose of the example, let's just look at this as an order block. This is the last sell candle before we had this impulsive move. Now this impulsive move actually broke a structure right here. This was the last high, so you can see that it closed above this high. So this confirms to us that we are still in the uptrend, right? So it created this order block before moving, and as you can see, this is another order block right here, but this obviously failed. But although it still closed above, but then this was the order block that was used. So in the practical terms, if I was going to take this, or let's say if we use this order block at first, and then we have our SL right here risking 1%, let's say just risking 1%, and our TP somewhere above. Now you can see that practically it came down and took out our SL and hit, but right here we have another order block just below it that we could actually still use, which is this one right here, and then put our just below the structure right here 21 pips, or let's say 20 pips, and then you can see that this gave us a nice 100 pip move. This is like a 1:5, right? So even if you took a loss from this one, you have recovered from this particular trade and you're up 4% again, right? So this is another impulsive move. This is another sweet one right here. So in mitigating this particular one, it created another order block, which will have a very perfectly looking order block. This is a sell candle, and then we have this impulsive move, right? So what I do is I'll mark this out like this. This is a 30 minutes time frame, so I usually just get in or set a pending order, or just wait for price to get there, and then I get in. So basically you can enter this trade with using the wick or using the body, like the open, or 50% of this candle. But I like to use the body, because you can see we already have a little candle here, a little spike, a wick that just came to the 50% of this candle. So practically I like to use the open, the wick, because this is a smaller time frame. So I'm just gonna leave this right here and just watch it. Now you can see that there is actually a break of structure to the downside here. We broke this last low, but the reason why I'm going to take this trade, or the reason why I took this trade, is because right here we have a series of support, a very strong support, right? So we have a lot of liquidity just below the support, because a lot of people are buying from here. Price came out and moved out, price came back here and moved out. Let me use this. Price came here, moved away, price came back into this, moved away, moved back. So we have a series of touches on this particular support, which makes this place a high potential for liquidity, right? So, and just below this support level, what we have is this order block that was created, right? So price came right into it to take out all of these stop losses that were here. Retail traders trading a lot of stop loss around here, and then mitigated this particular order block and moved out. Now this concept I would explain in another video, but this is basically about order blocks anyway. So when I'm doing my series of my confirmation checklist series videos. I'm definitely going to explain more of this particular type of settings, right? So you want to stick around for that. And if you haven't subscribed to my channel, you're just coming in for the very first time, please do subscribe to my channel. If you're returning, if you're just getting to watch my video again and you haven't subscribed as well, please do so. Let's get this channel to 1,000 subscribers, and then we can do more good on this channel, right? Okay, so let's proceed, right? So let's look at what we got from this trade. Let's get our tool right here, and like I said, I like to enter from the week. This is an aggressive entry though, but sometimes it always works because most times it works because I'm very conservative with my entry. I still risk usually 1%, but I just like to get in on time, right? So this is practically like a 23 pip SL. Let's just keep it at 20. Then we've got this long move, almost 100 pips, guys. So this is practically like 1:5, 1:5 good trade. So you can see that it actually activated on the open or the week of this candle, and then we got in right there. A good setup, right? So this is for a sell, this order block right here. As you can see, we've got this right here, guys. So market actually gave us a buy candle, and immediately we got this sell candle, and then the market actually dropped, right? So if we took this sell setup right here, oh no, not this sell setup right here, I like to take mine from the open. If you look closely, guys, let me zoom this a little bit. You can see that we actually got in the 50% of this candle. 50%. Look at that, right? That is exactly 50% of this particular buy candle, right? So if you're the type of person that likes to take your trade using the 50%, you got in like, this is a super sniper entry, right? Without like a zero drawdown, you definitely have to use a very reliable broker to be able to get in on this trade, right? So me, I do take mine from the open or the week of it. So this is like I think a 10 pip SL or so for me. Okay, yeah, practically I just leave it at 10 pip, give it some room to breathe. 10 pip SL, and then look, guys, look. I remember the reason why I'm gonna take this trade is because remember we are in an uptrend already, but look, this was the last low that was created during this move, right? So practically after this impulsive move, this impulsive move actually took out this low right here. It took out this low, and then market closed below it, and then we had a reversal. We have a reversal back to our order block, and then it's got our order activated, and then we drove this price down. So personally, I would like to just take my my TP right around here, but you see this is a 1:4 40 pip. But if you hold quite longer, which I definitely will, make my second TP will be around here. This will give you about 90 pips. So this is like 1:9. For some people that are going to hold this more aggressively, which I don't think I might hold to this point, get even more, guys, even more. You can see. So this kind of stuff's what really good. This is like 150, 160. This is like 1:15, 1:20. This is the power of order blocks, guys. So let's get one more example on why some of these order blocks don't hold. I think I saw something like that somewhere around here. All right, this is an order block right here. Let's expand this a bit. Right, so as you can see right here is an order block. We have this buy candle. We have this buy candle right here, and then after the buy we have this impulsive move to the downside. As you can see, clean impulsive candles, and then somebody might want to put his entry right here, get into enter this trade. And there's really nothing wrong with getting your entry here. It's a perfect entry, but the only problem with this is that this is an uptrend, remember, and this was the last low that the market created right here. This low right here, and as you can see, market just came down and respected this low and then started going back up. So the reason why some of these order blocks don't hold is because you're trading it on the wrong trend. This is a sell setup on an uptrend, guys. So before you can take this kind of setup, you need to see price at least break this low first, or even this particular low, before we can go back for a retracement to get on this trade. But for the fact that the price didn't close below this, just tells you that there's every possibility that this the market is going to continue in the up direction. So if you took this trade right here, hoping to get in on a short position, hoping to get some really good amount of profit, it will take you out and you'll be wondering why. And the reason is because you are in the wrong trend and you didn't wait for the break of structure. Now maybe you have your TP right around here. You can see the price definitely came back to mitigate this order block, and it will take you up and then start giving you profit, only for it to go back and hit your SL and move in the right direction. And the reason why is because you didn't wait, you were not patient enough to see a break of structure, because that is the reason why a lot of people, you know, get it wrong, and they complain that most of these order blocks don't work because you're not using it correctly. All right guys, so I wouldn't want to make this video too long. It's getting long already, and in my next video I'm going to talk about reversal. This is the reverse OB, so that's the opposite of this particular one that we just learned right here, and I'm going to teach you everything you need to know about that and how to trade that as well. Right, so if you haven't subscribed to my channel, better do that, please. Let's get this channel to 1,000 subscribers already, and then we could do some more good stuff right here. Okay, so I still remain Jackson, aka the Forex Blue Key. I'm gonna see you in the next video. Bye for now.